Good afternoon, everybody. I'm Sapna Desai. I head marketing and communication at Cigna TTK. Really excited to welcome you to the second edition of Financial Vaccination. It's our objective to spread knowledge and increase awareness on financial planning and planning for uncertainties. At Cigna TTK, it's our mission to improve the health, well-being, and sense of security of our partners. And financial vaccination is a step in that direction. I'm really happy to have Gaurav Mashruwala with me today, and he's a stalwart, and he's going to share his thoughts and answer all our questions on how do we live a life full of happiness, fulfillment, and with a sense of security. And Gaurav, while Gaurav needs no introduction, but just to kind of say a few things about him, he's a certified financial planner and a practitioner. He has made it his life's mission to promote, and speak about topics related to personal finance. And thank you for that, Gaurav. What's very interesting I find is that he kind of blends his expertise with ancient knowledge and wisdom, and principles that lead to an enjoyment of wealth. He's authored a book called Yogic Wealth, The Wealth That Gives Bliss. It's on my to read list, and I'm sure many of you can just add that to yours. And he's also he writes some columns like Times of India, and I've heard from him that he's going to go to CNBC Awaaz later this evening for a show. It's on at 6:30, so you'll probably see him there too. So he's always there in the forefront, sharing his thoughts on various issues. So once again, very excited about what we're going to have in the next 1 hour. We've look forward to all your questions, and as we answer them, and look forward to rich content that we create and knowledge that we pass on about financial planning and planning for uncertainties. So once again, Gaurav, welcome.
Thanks, Sapna. Thanks a lot. It's really heartening to know that a health insurance company is talking holistic, and that should be the approach, because no amount of only or isolated financial decisions, may it be only on investments, or may it be only on borrowing, or may it be only on savings, is going to help you live a comfortable financial life. In fact, it's like 4 wheels of a car. You need to say all the 4 wheels need to move in a synchronized manner. The income, expense, assets, and liabilities. Now, out of these 4 wheels, even if one wheel is not in harmony with the other 3, the car wouldn't move. And while we are doing a journey, obviously there could be breakdowns, there could be other issues coming up, and for which the need for importance or other wealth protection instruments and provisions needs to be done. If that's not done, somewhere or the other, our journey towards our financial goals gets huddled up, and that's when we have problem. Most of the time when we end up meeting people, it's not that they are not earning enough. So now invariably what is happening is, there is enough income, but there is no synchronization. There is no focused approach to channelize their finances in a manner that they get best out of it. And that's where all the problems start. So these kind of interactions where people throw in the questions and we try and resolve and give them a sense of direction is very beneficial. And congratulations for going beyond what is your actual, which is your kind of a product, and looking more from the community perspective and investment, or more of a financial awareness programs.
Yeah, I know. Thank you. That's something we really want to do. And I can, without much waiting, I can see a lot of questions coming up on screen. So let's go on to the first one. So I think Deepa Mystery is asking. So this is the start of the financial year, and there are a lot of key investments that people have to make and plan for the year. So what should a person really do, and how should they plan? And I know saving tax is high on everybody's list. So what would your advice to them be?
To save tax, one is thanks, Deepa, for asking at the beginning of the year, because one thing that I'm always assured throughout my media career is that I'll have enough shows in the month of February and March. Tax saving ke liye aate hi rehte hai. Another very interesting observation, this is unique in the world, that most Indians die in the month of February and March, because most of the life insurance policies are sold in the month of February and March. So that's in given. I mean, most of people buy life insurance policy for 2 reasons. One, because saving tax, and second is वो हमारे पड़ोसी की बेटी एजेंट बन गई, चार्ट अकाउंटेंट के भाई एजेंट बन गए, टारगेट खत्म करना है. But honestly, that's not what life insurance Now, when it comes to tax saving, get this one thing very, very clear. Our Finance Act is so beautifully enacted that the moment we start saving money for our financial goals, our tax saving will happen automatically, and start doing it from the beginning, and I'll give you a few examples. Let's go step by step. The basic human requirement, healthcare. And straight away, the moment you pick up health insurance, there is tax benefit. Life insurance, all of us know there is tax benefit. If you are picking up a home, if you are paying a rent, there is tax benefit. If you have taken a home loan, there is a tax benefit. And now for lower income group, government is also giving subsidies. After home comes education. If you are paying fees for your school fees, there is tax benefit. If you have taken an education loan, there is tax benefit. If you are saving for retirement, there is tax benefit. If you are retired and you want regular income to come in, there is tax benefit. If you have a long-term goal and you want to do a SIP in an equity, there is an ELSS which is going to give you tax benefit. If you have near-term goals, then you have debt-based instruments. So for every important financial goals in our life, there are tax benefits. The problem is that people, tax benefit, investments and goals, all three are not synchronized. They are never looked into in comprehensive manner, and that's where we get stuck. So it was the longest answer. Basically, I'm saying decide your goals and start saving on regular basis, and tax saving will happen automatically.
Yeah, that's a very interesting perspective, and I think everybody should really make use of that and get doing the right things going forward. Another question that's come up is that, and also from what I've been thinking about, you've written a lot, and from your articles about how do you invest to live a happy and peaceful life, and how does one really do that? I mean, life today is so dynamic, it is uncertain. So how does one kind of make sure that you're living a happy, fulfilled life?
Okay. So, of course, two parts, and Sapna already spoke about Yogic Wealth, and if we have time, we'll discuss and delve a little bit deeper. But the most important part that I've seen over my 25 years plus career is that the resources, financial resources, are not generalized towards the financial goals. In fact, majority of people don't even have written down financial goals, in the sense that whenever I start a lecture, if it's a live audience, I ask them, how many of you all want to make a lot of money? People put their hands up. Then I say, why do you want to make money? And they're vague answers, which means people have not made a list. If husband and wife comes to my office, I give them a separate sheet of paper and say, make a list of your financial goals, and they're completely different. So we work long hours. It's not 8 hours anymore. It's many more hours. We slog, but we don't know why we want to save, which means what I said earlier. Our goals, our investments, our expenses are not in harmony. Now, moment that happens, you will start seeing results. And while one way is to make financial goal list, but let me give you an easier way. Since you're already on Facebook, let me give you a tip. With your gadget, take a selfie of you, your family, and then next to it, write down your goals. And hereafter, whatever decisions that you take in life for your finances, ensure that they are made for those financial goals only. So, for example, if you decide that your goal is to go to Europe, family vacation next year to Europe, put a goal there and start an SIP, and don't call it whatever. So Cigna is of course into health insurance, but suppose if they are a mutual fund company, instead of saying Cigna Equity Fund SIP, call it Family Vacation SIP. It works brilliantly. I've seen examples where family members contribute, housewives contribute, children, they say, Gaurav uncle, thoda pocket money bachaya hai, wo Europe Vacation Equity Fund hai na, usme paise dal dene. The whole family does that, and a very, very simple activity. The entire financial activity is a family activity. Family goes together to purchase a TV. Family does a lot of activities together. Make this thing, align your financial resources to your financial goals, and you will enjoy your finances.
Wow, you kind of make it sound so simple actually, but so true. Put in your goals, think of your goals, and get planned towards reaching that. Yeah, I think that's very valuable input, and I hope many of the listeners kind of take away from that. Gaurav, also, you're also kind of sharing it on the show. but you're also a cancer survivor, is what I've read. And I read that article of yours in Reader's Digest where you kind of spoke about it. That must have been quite a journey, the whole process, and also kind of managing both all the things that came with it, the financial, challenges that would have come from such a, unplanned kind of an event. So, and that's exactly what, we would like our consumers and people to,
Sorry, so these things will happen, and live with that. And it's not only with the Facebook or live TV, it happens in all walks of life. And sudden unplanned expenses come up. Now, something that we talk about in financial planning is wealth protection, and how to ensure that the existing wealth is protected in times of turbulences. And these turbulences could be in form of either sudden rise of expense or sudden stoppages of income, or it could be combination of both. So one is you need to have contingency fund, and then the second most important is health insurance. And I was talking about my example where I was diagnosed with a critical illness, cancer, and underwent a couple of surgeries. But first time it was in 2008. And in that year, the total expenses that I had to incur was 10 lakhs, out of which 2 lakhs were to go to US, and which obviously wasn't covered. But out of balance 8 lakhs, I got 7 lakhs 65,000 for a couple of reasons. One, I had enough cover. The premiums were paid on time. The documents were kept properly. So that is one where I see a lot of people struggling. Second is my agent really helped me how to make a claim. Remember, your agent is your hero, and you ensure that you have agent who's full-time into it. He or she is actually knowledgeable, has qualified, has cleared all the exams, and is able to help you with the claim. Agent's role does not end with just collecting premiums. In fact, their most important role is helping you put the claim. So he actually was guiding me as to how to keep all the papers, how to get prescription, all the way. So how to keep all the bills, ensure on the bills my name is spelled correctly, the doctor's name is spelled correctly, keep all the reports. He helped me prepare an entire file. So claim form, and then the diagnosing and the reports, and the Excel table on all the expenses, put all the bills. Not only that, he also told me that number those. So the 50 of them, don't put 1, 2, 3, 4, 5. 1 of 52 or 53 and the entire bunch. Now, in fact, at some point of time, start doing small snippets on how people, make mistakes in claiming those, and those are difficulties. So that kind of thing really helped me. And even after that, those couple of surgeries that I had to undergo, I've got most of the claims purely because A, there was sufficient cover, B, putting in claim, and the agent really helped me. My general experience is not because Cigna that I'm talking about, but general experience is that insurance companies want to pay money. They won't survive otherwise. I mean, if they don't pay claims, they'll not have it. It's just that the agents are not helping you in a proper manner to make those files, and patients and the relatives are not ensuring that there are proper documents. And moment you start doing it, there's a very good possibility and majority of cover will be paid.
That's true, and thanks Gaurav for sharing a personal experience. I mean, it's really important to understand that. And you're right. I mean, I think principally, all companies want to pay the claim. We want to kind of deliver on the promise that we've made, and I think it's much easier if we have all the forms documented and right paperwork, and all that insurance companies are really trying to avoid are frauds. So, as long as there is a complete intent and we have the clear paperwork, as Cigna, for example, we've always been having one of the highest claim ratios. So, and we're very proud of that. So, I think it's definite, and we should take your advice of kind of making these snippets, do's and don'ts, and how to claim. So, that's a great advice. And all right, so I think let's move on to the next question. There's a question here about GST. A lot of talk now in the market. So, how will GST impact my investments and my insurance premium? So, how do you see that? Yeah, how do you see that rolling out?
Okay, so yes, a lot of discussion and GST coming out and the insurance premium, and there'll be 2-3 phases. One is a phase where there will be transition. And in fact, first is a phase where there will be implementation.
Okay.
And that itself, there could be some hurdles. Then there is transition, there will be resistance. Now, this is the period where we will see difficulties. Any new thing coming up is bound to create difficulties. In fact, demonetization itself, the kind of difficulties we faced on 9th of November vis-a-vis the difficulties we faced on 9th January, and today I think it's become a way of life. So GST may take little longer, but it's in the interest of the country over a longer period of time, and my feeling is that longer period of time will not be more than 9 months to a year. And obviously it will keep evolving. Any new law will evolve. So during that time we will have problem, but once that settles in, it's good for the overall economy. And if overall economy was to do well, trust me, we all will benefit. So if somebody was to ask, what will GST impact? Yes, there could be turbulences, but over a period of time that will help us.
Yeah, I think that's great, insight. And I think we're going to keep seeing how it really evolves, and I think in the whole ecosystem how it will kind of fit together. But I think the main thing is for any company, they're going to try to make it as simple for the consumer, and make it simple and less painful. So we have another question here, and it kind of says, do you think financial planning can effectively cover for any unfortunate sudden event in life? So
that's of course Mr. Roy. Yes.
Yeah.
So Mr. Roy, here it is. If somebody was to say that will it cover extensively, my answer is no. I mean, there's somebody called as God, and he needs a lot of attention. So keep giving importance to God. But apart from that, what will happen is financial planning will start help you channelize your resources. And when we say financial planning, it's not investment planning alone. Most people feel that that's true, or that financial planning is investment planning. That's not true. Financial planning comprises of 3 stages. First, obviously, setting financial goals, and thereafter, the way we look at it is, first is wealth protection.
Right.
So whatever wealth has already been created, how to protect it from untoward incidences. So contingency fund is the first. Then which cannot have a formal insurance. It could be a job loss due to catastrophe, due to some man-made incidences, economic conditions, your performance, but that needs to be protected. So contingency fund is for events where there is no formal insurance available. The second part of that wealth protection is events which can be covered with the help of insurance. So health insurance, disability, accident, life insurance, even property insurance, so your car, your house, whatever. Once financial protection is taken care of, move on to second stage, which is wealth accumulation. And here start focusing on your responsibilities and dreams. To meet your responsibilities, do you have enough funds? Have you saved enough? If you have not, do you need to borrow money? Where would you borrow it? If you already taken a loan, should you continue? Should you prepay? Now, once that's taken care of is when you move to investment. So investment comes fairly late. Start with goals, go to contingency, then insurance, then loans, and then move to investments. And what I said a little bit earlier is link all your investments to your condition. Don't look at external conditions, which means link it to your financial goals. Now, once that's done, then look at savings for retirement and investment for retirement. Well, that is part of investment strategy, but it's a long term and hence it requires a special focus. So that's the second stage, wealth accumulation. And the last stage is wealth distribution, where you distribute your money to your own self during distribution, during retirement. And lastly, estate planning as to how does your asset go on to next generation. Nomination, creating will. Now, when it comes to will, obviously we are not discussing will today. People ask me, when should I make my will? And my answer is the day you opened your savings bank account. Because after that, you would start creating assets and the issues come up. So wherever there is family, wherever there is will, there is a family. And wherever there is a family, there is a will. So you need to ensure that your assets go to your near and dear ones. In fact, a will is your financial autobiography. And it's not your death warrant. So don't think if you make a will, Lord Yum will come to your house tomorrow. I mean, he has a lot of other work. But you please ensure that that is in place so that your finances are in place, and also ensure that you go on what I call financial date. Husband and wife every 3 months go on a financial date and spend about 2 hours every quarter, which means 8 hours in an entire year. I'm just saying 8 hours in your entire year to look at your finances. People don't look at it. I mean, there's so many messes that happen. Even in health insurance, premiums not paid, address is not updated, KYC is not done, banks have unclaimed deposits, mutual fund dividends are not banked. I mean, lot of things. So please go on financial date, 2 hours every quarter, 8 hours a year, and that's how you will be able to achieve the kind of satisfaction that you want. So, Mr. Roy, do all these things. Believe me, financial planning will help you focus your money or direct your money towards your financial goals.
Okay. Yeah, it's something to again think about. Okay, I have another question here from Rajiv Khurana, and he's kind of saying, please talk something about other wealth. Not only about money, something related to your book. I think a lot of people want to hear about, your book.
So I know, Rajiv, you have read it, but please dig it. It's Yogic Wealth. Now, I'll tell you what. I've been in this industry for more than 2.5 decades. And what I've realized is that our income levels have gone up, whether we feel sufficient or not. But we all are earning much more than our earlier generation. The spending avenues have gone up. So shopping malls, brands. When I tell my 15-year-old daughter that when I was 15 years old, if somebody was coming from abroad, uncle or aunt, I would ask for a Kit Kat chocolate because that wasn't available.
Right.
And she gets kind of, Kit Kat chocolate, what are you talking about? And I said, Nike shoes, somebody getting, wow, Nike shoes. So spending avenues have gone up, loans are easily available, and so are investments. So income, expense, assets and liabilities have gone up. But along with that, stress, diabetes, hypertension, broken marriages or a broken relationship, that is also going up, and which means enhancement in financial life is not translating into quality of life. That's when I decided to look at scriptures. And our scriptures are brilliant. I mean, trust me, those Rishi Munis and sages were not only spiritual, they are brilliant economists because they have spoken about such comprehensive way to enjoy wealth. In fact, they have never criticized money. That's the reason they have depicted wealth as goddess Lakshmi and not as a demon. Something to worship about. That's what they have done. They've spoken about 8 different kind of wealths, but I'll speak to 4 predominantly, which is concerning finances. Physical wealth, which is our health, social wealth, relationship with spouse, family, emotional wealth and financial wealth. So, शारीरिक संपत्ति, सामाजिक संपत्ति, मानसिक संपत्ति और आर्थिक संपत्ति, और ये 4 में से किसी एक का भी बाकी के 3 के साथ समन्वय नहीं है तो आप एक भी एंजॉय नहीं कर पाओगे. सोचिए अगर आपके पास 5 लाख या 50 लाख या 5 करोड़ या 50 करोड़ जो भी नंबर अच्छा लगता है उतने पैसे है, लेकिन सिवियर माइग्रेन पेन है, इतना पेन है कि आप मतलब सर फटा जा रहा है, तो 5 करोड़ कैसे एंजॉय करेंगे. या हाइपर एसिडिटी है, तो अगर हेल्थ नहीं है, हेल्थ जरूरी है इवन मटेरियलिस्टिक वेल्थ एंजॉय करने के लिए. दूसरी संपत्ति, द सेकंड वेल्थ इज सोशल वेल्थ. सो आई स्पोक अबाउट रिलेशनशिप विद फैमिली, वाइफ, चिल्ड्रन, सोसाइटी, बिकॉज इफ यू आर लिटिगेटिंग विथ योर cousins for ancestral property, or there is strained husband-wife or a partner relationship, no matter whatever kind of pay scale you have, you're not enjoying it.
Right.
And financial wealth. I mean, if I want my daughter or son to go for higher education in the month of September, and there's shortfall of 5 to 7 lakhs, I could be healthy and good society helping me, but it's not there. So, scriptures talk about 4 kinds of wealth, and that's what I've spoken about in Yogic Wealth. A lot of emotions arise in our mind when it comes to money. So Yogic Wealth actually starts with harmonizing these 4, but it starts with various emotions. So money and greed, money and jealousy, money and insecurity, money and inferiority complex, money and ego. And when these things come in our mind, we don't enjoy. Yoga is basically non-flickering of mind. So when your mind doesn't flicker for money is when you will enjoy. So just to give an example, if you like iPhone 7, go ahead and pick it up and enjoy. But after picking up iPhone 7, I'm going to look at Sapna's iPhone and whether it's iPhone 8 or iPhone 5. If she's using iPhone 5, I'm thrilled. But if she has iPhone 8, then wo 40-50,000 gaye pani mein. And that's what happens. So you like Mercedes, pick it up. But the moment you're going to compare, so be careful. Get into a situation, and jealousy, it comes in so subtle way. We don't accept that we are jealous. I mean, somebody picks up a big car and we're like, इतनी महंगी गाड़ी तो ले ली लेकिन बम्बई में ट्रैफिक ही कितना है कि मैं एंजॉय कर पाए. Subtle form of jealousy. ये फॉरेन तो घूम के आए लेकिन उन्हें वहां का कल्चर ही कहा. Be careful of those. The moment your mind will flicker, you will not enjoy. That's what scriptures talk about. I mean, that's what I've written in Yogic Wealth. And to take care of that, the 4 wealths that I spoke about, and that's when we start enjoying money. The entire thing is scriptures want us to enjoy money, enjoy wealth. Only when we are fulfilled is when we will share it with society. Share it with society. Because that will give you more happiness. But do it in a manner where you don't get ego, which is again flickering. So that's what it is.
Wow. I have so much to absorb. Very interesting. And हमारी जो line है हमारी company की वो health है तो life है. So so I think वो जो आपने पहले बोला उसी के ऊपर हमने
absolutely. Actually, Sapna, I'm digressing, but Deepavali, and I'm going to थोड़ी बहुत दीपावली के बारे में बात करूंगा. हालांकि क्वेश्चन नहीं है. दीपावली का जो त्योहार है वो इसी तरह प्लान किया गया. लक्ष्मी की पूजा है. सबसे पहला दिन हम कहते हैं वाक बारस, लेकिन वो वाक बारस है. वाक इज स्पीच, एंड दे आर सेइंग दैट worship Saraswati. The second day, what we call Dhanteras, and that's what is relevant to you. It's not Dhanteras. It is Dhanvantri Tirodashi. And Dhanvantri is a Rishi who gave us Ayurveda. So be healthy. So furnace, acknowledge, be healthy. Third day is Kali Chaudash, is when you are saying that remove all the mental, all the bad feelings. और उसके बाद ही लक्ष्मी की पूजा होगी. So धन्वंतरी तिरोदशी is what you should be relating it to it. that अगर लक्ष्मी चाहिए तो धन्वंतरी की पूजा करें. You have to do it, and that's what you require health insurance for.
Yeah, I think there's so much in our ancient history.
Oh, it's there on platter.
It's all so rich. We have to just kind of go back and apply it. Okay, let's come back. I saw a lot of questions. I think there is an interesting one from Yogita, who's kind of asking that when should, what is the age, what's the right time to start planning for retirement?
The day you earn your first salary. I mean, these are such simple questions. That where do I plan for retirement? I mean, the day you start working, you're going to retire. Start earliest. The earlier you start, couple of things happen. First is, when you are in your 20s, and I know that 20s and 30s are golden splurging years, but 20s and 30s are also golden saving years. And you need to balance between the two. I'm not saying don't splurge. Enjoy. Gold is in your pocket when you start getting your first pay. But when you start earlier, one is that you're going to give your money very long time to grow. So, you have time to nurture. What we call as risk is you can invest in assets which will be highly volatile. You can lose, but you can also make up money and you can create a lot of wealth. So you can invest in assets which has potential to grow. Plus, in these years, we have less number of dependents. And hence, the percentage of money that we can save from our take home. So while our earnings are less, but from that we'll be able to save larger amount of money. So start doing that. Earlier you do it. And the power of compounding. I mean, Einstein has already spoken about compounding as the 8th wonder of the world. So start looking at all those things, and the sooner you do it, better.
Great. I think that's that's an incentive for everybody to go and start planning right now. There was another question from Raymond, and this is something I often also think about, and I've experienced it in both my earlier life insurance stint and now in health insurance. So in India, people really kind of look at, very good at saving. We do save. We understand the concept of saving. And, so how should they really look at insurance and, planning for risk? So should they look at insurance for investment, or insurance is, risk planning kind of, so how do you really place investment, insurance? And I think the question from Raymond was, how should we look at insurance as an investment?
So, I spoke earlier, insurance is a step before wealth creation. It's a wealth protection. And don't embark on journey of investments till you have not protected, because I give my own example. We have seen enough instances where people don't have enough health cover or they don't have enough life cover, huge amount of wealth, but any turbulence, and then they'll erode whatever has been created. So no matter however large pyramid of wealth that you create or structure of wealth that you create, if the base is not there, or if that's weak, then that wealth is susceptible to risk. So that should be the first step. Health insurance for me, or life insurance, or for that matter any kind of insurance, is not an investment, but it's something which is before investments. I mean, you have to embark, and don't ignore that, because if that's not there, your investments are in more difficulty and can get into
Yeah,
so don't ignore that. Do that first and then move ahead. Whether it's an expense, of course it is. It's not an investment. Don't look at insurance from investment perspective. More from life insurance perspective, because leave aside expenses, and yes, currently those products are expensive, but these things can change. The problem that happens is, moment you pick up 2-in-1 product, which is investment and insurance, and assume the investment component is not doing well, your particular scheme or policy, you can't terminate that, because then your life insurance will go away. On the other hand, if life insurance is insufficient, then also you need to pick up something. So the ability to maneuver, investment will require flexibility and ability to maneuver, not necessarily churning, while life insurance has to continue. Also, assume you have taken life insurance to take care of your home loan. You paid back home loan. You still will have to continue because your investments are linked to it. So don't go for any 2-in-1 products as a fundamental principle. Second is because currently the expenses charged by life insurance companies are a little high. So there you be careful. But even if they come down, it's not main reason. Main reason is don't do 2-in-1.
Yeah, all right. I mean, that's a good point to think of. And just kind of, if I just go a little deeper on this question, another thing is people kind of look at insurance and you don't get anything back, right? You're paying a premium, but I'm healthy and nothing happened to me. So people many times hear that they kind of look at it like a waste of money. So so how would you react to that kind of a situation? How could we motivate consumers to kind of understand the principle of paying for risk?
Sir, yeah, Sapna, good question. I keep facing this, and every time I have to renew my car insurance, and if I have not had accident, I feel so bad that but one day prior to that, I want to go and bang my car. Boom! Why? I mean, whole year I paid and I'm not getting claim back. Or when I have to renew my health insurance, I'm like, eeks, this whole year I haven't fallen ill. How on earth can money go away without me falling ill? So I'm telling everybody that before renewing health insurance, get admitted in hospital, एक दो चीज कटवा ले, और दूसरा कर ले कि गाड़ी बाड़ी को ठोक दे. करते हैं ऐसा? वैसे ही है दोस्त. Don't do that. Don't think it from that. You had a cover for entire year. If something would have gone wrong, that would have made good the losses that you would have suffered, and those losses can put you really in turmoil. So the way when we have a vehicle insurance, we don't want to bang it just because we didn't get a claim, or before health insurance we don't get admitted. Same thing with all kinds of insurance. बीमार नहीं पड़ेंगे उसका मतलब ये नहीं आगे बीमार नहीं पड़ोगे. एपिडेमिक्स हो सकते हैं, एक्सीडेंट्स हो सकते हैं, और हेल्थ केयर कॉस्ट अभी इतनी बढ़ गई है, लॉन्जिटिविटी भी बढ़ी है, लेकिन इतनी बढ़ गई है कि ये कॉस्ट कभी कभी हमें पूरा का पूरा जो सेविंग्स हमारा है उसे इरोड कर देती है. फाइनेंशियल प्लानर हूँ, इतने सालों से हूँ, 20-25 साल का अनुभव है, और कई सारे फैमिली देखे हैं कि उन्हें घर गिरवी रखना पड़ता है, पर्सनल लोन लेनी पड़ती है, और तब बुरा लगता है क्योंकि ये ऐसे फैमिली है जो अफोर्ड कर सकते थे, लेकिन पैसे बचाने के लिए उन्होंने इंश्योरेंस कवर नहीं लिया, और फिर ट्रीटमेंट कर ली, फैमिली मेंबर तो ठीक हो गया, लेकिन उसके बाद में कई सालों तक उनको भुगतना पड़ा. तो कई सालों तक बीमारी के बाद में भुगतने से तो अच्छा है कि पहले आप थोड़ा थोड़ा प्रीमियम भरते रहे, और अगर टैक्स अच्छा लगता है तो टैक्स तो बचता है, सरकार को पैसे देने से हेल्थ इंश्योरेंस कंपनी और लाइफ इंश्योरेंस कंपनी को पैसा देंगे.
Right, yeah. So, very true. And I think it's very, very important because, I think in the long run, I mean, if you're going to pay, we hope that you stay healthy. We don't want, something to happen to you. But I think the point is, if something happens, you should be prepared. Yeah.
So health insurance company don't want you to fall ill.
Yeah,
The motive is that they say on claim. I'm just joking, but yeah, absolutely.
Yeah.
We want everybody to stay healthy.
Absolutely, we stay profitable. But
leave that aside.
Point is, we are willing to be there. We are willing to partner, and be a part of their journey and be a part of their, take out this, give them a sense of security and not let them think about financial issues when the time comes.
Oh yeah. In fact, even when it comes to health insurance, another problem that I face with most people is they've taken health insurance, but the members of family are not aware. And that's very, very important. So many times when I do events for couples, and now we have women also educated. So it's wife who's handling entire finance or husband who's handling entire finance. And what I tell them is that the spouse who's handling the finance go out of room. Then there's somebody who's not handling the finance, and I give them a blank sheet of paper and I ask them 4 or 5 questions. I say, write down the name of your chartered accountant and the number, health insurance agent and the number, life insurance agent and the number, mutual fund agents. And sometimes I get a blank paper. So I said, school mein cleanliness paper mein marks milte the. So I said, iske marks milenge. Lekin please let your family members know. If husband is handling, wife ought to know. If wife is handling, husband ought to know. I've seen instances where there is enough health cover, but family members are not aware, paid, and then they could not get the cover because the member didn't know how, family member did not know how to do claim and within certain time limit. So first is go for health insurance, but also ensure that your members of family, your adult children, or even younger children for that matter, and spouses are aware of health insurance.
Yeah, it's very, very important. I think you're absolutely right. It's very critical. Many times people just take the policy and keep it inside, and you have cards and all that stuff. It should be there with you.
Absolutely.
People should know about it. It's very, very important. Okay, let's go back. We have a question from Vishnu, and he's saying he's a working professional. He's covered by his company, but is that enough? So should he look at buying a health insurance over and above his company coverage? And how should he look at that? Okay,
so Vishnu, here are a few things, and thanks for asking this, because the another issue that we face is with employees. Lot many times when we ask them that, do you have the cover, and they say yes, and then I say, okay, have you walked up to your HR department or admin department and asked them what kind of cover is it? Limited, unlimited? Is the entire family covered? Is there a cashless? If it's women, are their illnesses covered? Lot of issues. So first is, if you have it from the employer, brilliant, but ensure that you are fully aware, your members of family are fully aware. So that's one. Now once you are aware, you'll automatically know whether it's sufficient or not. If it's not sufficient, take additional cover. If it's sufficient, then ensure that if you change a job or you change the career, as in become self-employed, then you take an independent cover. Also, we can't make out your age, but individuals who are retiring, and if you have a cover from your employer, you need to find out whether that cover will continue post-retirement by paying premiums directly. If that's going to stop, then either 5 or 10 years before retirement, take an independent cover.
Okay.
And ensure that there is a track record, because at 60, my feeling is, and correct me if I'm wrong, Sapna, is that the cost of health insurance shoots up.
It does.
And the coverage that companies give, they're a little reluctant, or they may charge a lot of, and those are the years when you require more cover. So all those who have cover from employer nearer to retirement, take an independent cover, and others who are in employment, get the details and then decide whether you want more cover or not. It can't be ignorance. It can't be like छोड़ दिया. कई लोग कहते हैं, HR वाले आके कहते हैं कि हमने तो पूरे एम्प्लॉइज को ईमेल भेज दिया. Then I catch out one employee, हाँ आया था लेकिन वो तो मैंने बाद में पढ़ने के लिए, बाद में मतलब क्या, अस्पताल में एडमिट होने के बाद. It doesn't work like that. Please look at it.
Yeah, it's very important. We have to, as a society, we need to be more, aware of these things. We need to be more aware. We need to plan it much better than we do. I think we are a very, as a society, we are pretty, sometimes we can just let go of these things, put them under the carpet and feel secure, while we are not actually so secure. So, very true. And actually that brings us to another question. And how does one define how much health insurance is enough? So what is the right amount of health coverage a person should have? I mean, we get this question many times, and I think people also have that thought.
Good. Yes, we face that now. Difficult to put an exact number, but first is your health condition, obviously, because if the health conditions are good and if family track records are not there, then whatever general cover. If there are those specific illnesses, then obviously you need more cover. But leaving that aside, it's dependent on the city that you live in and the areas within that city. So, for example, my general experiences, and I'm sure Sapna is a better person to answer that. All difficult questions, Sapna. But if you're living in, say, Bangalore or Mumbai or Delhi, and I believe the cost of health treatment in Mumbai, Delhi is more compared to, say, if it's a Baroda or whatever. So then you need to have more. Even within the city, the area that you're living in. So if you're living in South Mumbai, which is an upmarket, the hospital bed costs there much more.
Right.
Vis-a-vis, say, in a distant suburb. So look at all these parameters and then decide, because when an illness comes to you at night, you're not going to go and find out a cheapest hospital. You're going to find out a hospital which is going to admit you immediately. So the city that you're living in, the area that you're living in, your own health condition, look at all those and then decide health cover. I'm not sure if Cigna has it, and I'm not sure if other health insurance companies have it, but if there is some way you all can guide people as to this is the city that you're living in, this is the area, and this is the health condition, this is a kind of cover. I mean, if that's possible, maybe someday you want to kind of do some activity around that.
So that's interesting. So I think what we have at Cigna is that we have a differential pricing. So for a tier 1, tier 2, tier 3, we have a different kind of a pricing for the same amount of cover. So if a person wants to buy a 3.5 lakh cover from a metro town, we kind of look at all the hospitals and give them that kind of a pricing. Tier 2 has a separate pricing, so we kind of take that into account when we, give the benefit back to the customer.
So take that call. I mean, whoever is your health insurance company, go speak to them, and find out what is best for you.
Right. And there was a question from Riddhi that when you're looking at health insurance, how should you look at it? So how should we have more than one health insurance? What kind of a health insurance portfolio should one have?
So, once you decide on the cover, then you need to check whether a single policy can cover the cost of premiums, or do you take an individual cover and beyond a point of floater plan. I've also seen instances where families can't afford, and hence we say start with the floater, so that you are saving on cost. Plus critical illness. So I think some life insurance company uses this example, but I guess it's more applicable to health insurance as well. Your plain pizza base and then the toppings.
Right.
So based on your condition, you need to choose what all toppings you require and how much, because it's not a single product which is applicable to all. But the moment you have more than one cover, ensure that all the insurance companies from whom you have cover are aware, because I think principle of contribution will kind of kick in as to when the payout.
Deductible.
All those and deductible will kick in automatically, top up, so that both insurance companies are aware, and hence if claims are made, in case you need to share original, so you submit original one place, get them kind of get a photocopy, true copy, and submit somewhere else. But ensure that is the moment you have more than one.
Right. Right, and just to kind of add on to that, I think you should also look at your lifestyle and some basically genetic challenges that if you have. So if you have a basic healthcare cover, if you need to top it up with maybe a critical illness cover, because that's a different kind of a cover. Those are things that you should consider, when you're kind of planning your whole health insurance risk. So that brings us to another question. I think so basically when in today's kind of changing lifestyle, how do you kind of go about doing financial planning? And should you do it alone? Should you come to a financial planner? So do I need an expert to do this kind of exercise? So how does one go about trying to get this
So my answer is you don't need to come to a financial planner, honestly, as long as you can behave yourself. And that's critical. So if somebody was to ask that, do I need to go to a gym trainer and dietitian to live a healthy life physically? And the answer is no. I mean, as long as you are exercising on your own, the basic exercise, and you are eating proper food at proper time, you don't need it. But if you are not doing it, then you better go to somebody. I mean, don't ignore. And I already spoke about the entire process. So I said, decide your goals. I spoke about selfie, and then I said, look at wealth protection, wealth accumulation, wealth distribution, financial date, reviewing. Do that, all those things in disciplined manner. Get one thing very, very clear. Nobody ever becomes wealthy by making a lot of money. People only become wealthy by keeping and managing a lot of money. And that's the crux. If you can keep and manage a lot of money, you'll be wealthy. If you don't, then go to an advisor. So it's your call. If you're disciplined, if you're going to review it, if you're going to nurture it, honestly, it's all about nurturing and being disciplined, because we just want a single plant, a small pot of a beautiful plant. We don't need to pay a lot of attention. Just keep watering it, it'll stay in window. But if you want a garden, you have to pay attention. So if you want large amount of wealth, a beautiful garden, you have to pay attention. If you're not going to do that, yes, people like me will survive in profession always. But otherwise, you don't need to go to planner. Basic is what you can do on your own.
Right, I think that's a simple analogy. But I think it's a good advice. I think I'm going to go to a financial planner for sure after this. So
that keeps me in profession.
So it's really critical. Okay, and that's great. So I think another question which I just saw, I forget the name though. What if you have a pre-existing disease, okay, and you need to kind of get a plan, and you're not finding it, you're almost coming like ineligible for a plan. So how do you handle having a pre-existing disease, and then you're going out in the market to buy a health insurance plan?
Little difficult, and I guess you may want to check with various companies, or there are brokers who will help you. If there's nothing that's available at all, then you save and create a separate kitty and ensure that you have earmarked that for your. Like somebody like me, I'm not getting enhanced cover, and in companies who are willing to cover me are not giving me for my illness and other things. Live with it. It's not going to end your life. It's just that you create a separate kitty and keep it aside and say that, okay, this is the amount of money. Now, the question will come is how much, and there is no certain answer. So it's not like 5 lakh, 10 lakh, 50 lakh. So leave that aside, but keep a separate kitty, and beyond a point of time, trust in God, He has best in store for you. But shop around. What I've observed is over a period of time, a lot of these health insurance companies have come out with innovative products. There are top-up plans which will not cover you for basic cover, and they'll cover for the higher amounts, which is good, because the basic which is not covered, make an FD and say that okay, पहले 3 लाख का कवर कोई कंपनी नहीं दे रही है तो उसके लिए FD रख ली, लेकिन उसके ऊपर तो कवर है. So you're kind of saying that higher amounts is what I'm covering. वो एक हो सकता है. उसके अलावा फ्लोटर प्लान से कहीं पे वो मिल गया तो ऑप्शंस है, देखते रहे. Over a period of time, more and more products will come in. We are still evolving. Something is not available today just does not necessarily mean something will not be available after 1 or 2 years. I just keep trying, and I'm sure someday there will be a cover. So just keep looking at all those things.
Right, and I think that's correct. I think another way to maybe look at it is many companies might give you a cover beyond the pre-existing. So something you take in and take what you get in the market, and that's another way to look at it. And as Gaurav very, very nicely put, the whole perspective. So let's go to another question. We have, I think, 10 more minutes. So okay, we're there. So please share any more questions that you might have, and get on the keyboard quickly because we have another 10 minutes. Okay, so there is a question which comes in. So do I need financial planning if I've already kind of put a post-retirement pension in place?
So financial planning does not necessarily mean only investment planning. So post-retirement is, I'm assuming you are still working, or even if you have retired. Have you made will? Is nomination in place? Are your documents stored in a manner where you or your family can retrieve it? Are your KYC updated? Are your accounts properly done? Are your returns filed properly? Whole lot of issues that comes up. Nomination. I mean, I faced this. There was a young lady, not young, a middle-aged woman who had come to us, who had purchased a life insurance policy 20 years ago when she was single, and she had nominated her father. Father had died 10 years ago. Nomination was not changed. Now you could have a brilliant plan, but what's the point? Another 72-year-old lady had come, and this I've spoken in a couple of my talking assignments. Now, that lady came to me with 2 cardboard boxes of physical share certificates. You know, we used to get physical certificates. Now, that also had share certificates, that had unbanked dividends. You know, if you recall, olden times, companies would send us stickers. That was there. And all these were in the name of a father-in-law who had died 13 years ago without making a will. Now, her husband had died 2 years ago without making a will. And she was the one who was actual beneficiary, but this was the condition. A back of the envelope calculation showed the total value of those equity shares, good companies, was 2 crores. And she was living hand to mouth. It's not like she didn't have money. Now, post-retirement plan entails this thing also. Why post-retirement plan? That's why I say go on financial day, because you have to look at all these things. Retirement plan does not end with just money coming in. It's the entire thing that needs to be looked into. So look at it comprehensively.
Yeah, there must be such interesting, such stories are really pulling, when you kind of talk about these challenges that people face. So, yeah, we need to think about that.
In fact, another thing is, I don't know if there are any questions, but there are 1 or 2 experiences that I want to share.
Yeah.
People keep asking me about what is the right age to inculcate financial habits in children. And my standard answer is 1 day prior to taking them to shopping mall. Sapna, in so many years of my life, nobody has ever come and asked me, बच्चों को शॉपिंग मॉल में ले जाने की सही उम्र क्या है? People only come and ask me what is the right age to take them, which means shopping mall में ले जाने से बच्चे नहीं बिगड़ेंगे, वो बैंक में ले जाने से बिगड़ेंगे. So 1 day prior, but start doing those activities. I'll give you 1 or 2 examples. My daughter, she's now 15, but when she was 4 years old, I gave her a chocolate bag, a transparent jar, and उसमें मैंने लिख दिया chocolate bank, and because kids keep getting chocolates. I said, Beta, whenever you get chocolate, put it in this jar. And you are allowed to eat twice a week. So one is chocolate, eating got discipline. Another thing is transparent jar. I always feel piggy bank should be transparent. So, we see the level. Visually, वो chocolate डालती थी, level ऊपर जा रहा था. खाती थी, level नीचे आता था. Same thing with money. I've seen most piggy banks non-transparent. मतलब black money का concept वहीं से चालू हो जाता है. अंदर क्या होता है पता ही नहीं चलता. So, make chocolate a currency. Reserve Bank of India, they have brilliant comics which read out to kids. Let them know what money means. ये comics इतनी आसानी से बनाई गई है. There are so much things which are available, which we can do with kids right from the age they are 4, 5. Take them to bank. At 7, 8, ask them to open a recurring deposit. Let them go to bank, fill up the slip book. ये बहुत सारे. Earlier you start doing it, more kids will be financially savvy. They should not feel awkward stepping inside bank. The way they are at ease entering a shopping mall, they should be at equal ease entering a bank. And then they will go on to become financially savvy.
Yeah, that's another thing on my to-do list now, getting both my girls, getting financially savvy. So yeah, it's very good because what they understand right now also is the whole ATM concept. You go in, you put in the password, and you get the money. So yeah, that my younger one gets it. But yeah, I think I need to introduce her to the financial concepts. Okay, so that's great. I think with that, I think I'm going to just ask you, Gaurav, if you have any final last thoughts. We have like 2 minutes to close, and I think it's been a great session. I have enjoyed it very much, and I have learned a lot.
Thanks a lot.
I'm really glad to give this opportunity to all our, partners and consumers to take away your thoughts, and thanks for sharing. Because as you said, this is a topic that you don't really speak much on. Not all of us have financial advisors, so it's great. It was a great learning experience for me. So if you have to kind of share something.
No, nothing. Just enjoy your wealth. Honestly, I saw a brilliant advertisement about 15 days ago in a newspaper which said guaranteed 50 lakhs salary per year, along with that diabetes, stress, hypertension free. And after 4-5 days और एक इश्तिहार आ गया, वो कॉम्पिटिटर का था, वो कहते हैं गारंटी 75 लाख की आमदनी फ्री, उसके साथ डायबिटीज, स्ट्रेस, हाइपरटेंशन और डिवोर्स काउंसलिंग फ्री। तो ऊपर यमराज बैठे थे, उनको टेंशन हो गया कि ये पृथ्वी वाले लोग मेरा काम करते हैं, तो उन्होंने ब्रेकिंग न्यूज दे दिया, गारंटी 1 करोड़ की सैलरी फ्री, उसके साथ डायबिटीज, स्ट्रेस, हाइपरटेंशन, डिवोर्स काउंसलिंग और पृथ्वी पे से फ्री पिकअप सर्विस दी जाएगी। सो प्लीज डोंट वेट फॉर दिस, ऑनेस्टली एंजॉय वेल्थ, ensure that it gives you happiness, and prayers to God that you get wealth which gives you bliss. God bless you.
Thank you. Thank you.